What's going on, everyone? Quick little video on Amazon. So Amazon kind of had a little bit of a rough day along with the regular overall market. So we're just going to take a quick look at some technical analysis on the 1 hour time frame. I want to give some levels out that we can be aware of. So whether we want to trade this to the short side if the market gets weak, or whether the market wants to bounce, let's kind of look at those areas where we could make some money on the stock. So, the market really started to sell off in the pre-market when we got that CPI data numbers, and then we quickly rebounded and looked like we were actually going to take out some highs on the day. And then it was, we had something come out talking about, instead of possible 3 interest rate hikes at 0.25 a pop, which is going to be around 1%, they're talking about maybe we're going to get to 1% a lot sooner and do like a 0.50 rate, hike. A lot to keep up with. The Fed right now is kind of just playing the market like a little bit of a puppet. I know that trading environments are not the best. Normally we want to just, be able to kick back, stay in a trade longer than what feels like 2 minutes, but let's just quickly get into these levels because it's not that hard. We can see here, ever since Amazon earnings, we put up this big green candle. We pretty much just been, flagging around here. So Amazon does have a big range. It is a big stock. We're just kind of, waving around here. The top of the range is going to be those earnings highs, and that price is going to be 3,300. And then we're also going to have a little bit of resistance here, right? So that's 3,277. So in order for me to really want to trade Amazon to where I feel comfortable putting on like a longer trade, maybe a swing trade, hold it for a couple of days, we're really going to need to do this. We're really going to need to work our way back up here. We're going to need to break the 3,300. Okay. I'm still going to stay patient. What I want to see is a pullback either into 3,270, 3,280, 3,290. I want to see us consolidate around maybe 1-2 days. And then I want to see this. Boom. This is exactly where I'm going to take the trade going long. Okay. So if you are a scalper, you are a day trader, is there opportunities to maybe, catch a little bit of a move here? Yes, but the probability of this thing holding up when you're in between a range like this is going to be thin, meaning that you can get in, you might be green for 15 minutes and it pulls all the way back on you, and you go negative in your position a little bit for, an hour, and then it kind of comes back again. And that range is going to be here, this 20-day moving average, the 31.99. So let's call it 3,200. I think if we get over 3,200, yes, there's an opportunity for a scalp to the long side. You are going to have room here to 3,277. But like I said, if we get into this area, it's going to be like this: chop, come back down, consolidate, come back down. We're going lower. No, we're going higher. Consolidating at the top. Oh, we're bull flagging. No, we're all the way back down. These ranges are tough to trade. So market was weak today. If we do get more continued selling pressure heading into the rest of this week, which is Friday, tomorrow, options expiration, 0 days till expiration. I mean, not options expiration, but 0 days until expiration on those weekly contracts. Heading into next week, what we're going to want to look for here, you can see this level in pre-market that held, and you can see during intraday we held 31.54. I think that if Amazon starts breaking down below 31.54, it does have room to 31.10. Now, here's the only problem that I could see happening. If the futures do continue to sell off and into pre-market, we do open up red, I can see us kind of opening up already in this zone. So it's going to kind of just wash this play out, because if we do open up lower, what we would expect to happen in a healthy environment, whether it be bull or bear, is you could probably get this little bit of pullback in this morning dump, and then you can get consolidation and you get some sort of rip, right? We're not going to want to really play this long just because the setup is not there. So what we would want to happen if the market does open up red, we want to consolidate sideways. We do want to try to push higher. We want to get rejected somewhere around 31.50, 31.70, something in that area, right? Anything below 3,200, even if we were to come up. And then what we want to do is we want to see a little bit of rejection, and we want to see weakness. When we see the weakness, this is when we're going to strike. We're going to strike back below 31.50, or we're going to strike below this 31.10. And I think if we strike below 31.10, we do have a lot of room to the downside. If the market does want to continue to push at a very accelerated rate, we do have room all the way down here to 28.44. Definitely, I wouldn't try to hold that all in one shot. So I'm not going to think that the market's going to do this, right? Although it could. It very well could. But, just if we do get some sort of flush, look to take some profits here. If it chops around, starts making its way back up, can't hold the gains, look to take some profits here. Every time you put in a new low, depending on how much you're trading, depending on if you're trading shares or options, if you're taking multiple options contracts, definitely want to scale out of that. If you're just playing one, then what you would be looking for is just boom, you get that first initial flush, just sell. Just sell, take your profits, because the way that this market is moving, we can completely do this. Don't get caught, stay safe. You know, this is not an easy trading environment. If you have to sit out of the market, sit out of the markets. Guys, if you like this video, please subscribe to my channel. Also join my Discord. That link is down in the description box below, and I'll see you guys all in the next trading video.